Check, quick sound check. Can everybody hear us loud and clear? What's going on, Coach Paul?
I hear you loud and clear, Coach Jay. And at the buzzers, happy Friday. And what a
Happy
Friday it was.
Happy Friday to all of our buzzer beaters. Got the confirmation from Andrew. Audio video is good, so we are good to go. Happy Friday, everyone. Coach, they missed you yesterday, but we are back. Got all the audio issues figured out. We're ready to go.
Good to be back.
Good to have you here. I'm fresh off of a second place finish in the reversal challenge, so a little bit upset about it. But it is Friday, so we're gonna go into weekend um, feeling okay. But let us know how you are in the chat. Were you up on the week, down on the week? Anything you learned from this week that you can take into next week into your trading? Uh, what I've learned, Coach, is that there's still uncertainty out here. The markets are not sure, and at the drop of a dime, a headline can come out, news can come out, and shake these markets up a little bit. So have a stop.
Yeah, it seems to me I would even say there's certain uncertainty.
Yep.
It's very volatile, and it's the longer this goes on, it's unstable.
Mm.
Um, and we talked about this beginning of the year. I'm to a point. Well, I'm going to put the stop in almost before I put the order in. You hear
There you
Coach
go.
Dakota go, I'm going to talking about I'm going to enter where my stop is, although I think he did pretty well today, but it's, I've said it, pare it down. Um, my stop saved. I gave out profit and a couple $100, and it was the best, some of the best money I've lost in a long time. Um, it, and we'll go through it a little deeper, but yeah, they don't. It's certain uncertainty now. It's very unstable.
Yep. I see a lot of I see some comments in the YouTube chat, and I seen it in Discord also. Um, and we talked about it prior to the new administration happening. But if you hadn't traded during the last Trump presidency, especially in the beginning, it was a lot like this. So I see some people saying, I lost a combine due to a tweet. Now more than ever, risk management is extremely important, but not only risk management. And you've heard Andre talk about it on Topstep TV as well. These may not be market conditions where you can hold on to a trade and look for a runner. Um, without securing some profits. For me personally, that's how I feel about it, right? If I have a trade, I actually took a long in the NASDAQ off this trade, and we'll talk about it. We're skipping ahead a little bit, but uh, these are not market conditions that I personally feel comfortable holding a runner unless the market is aggressively going in my favor if I'm trading the equities. If there's a little bit of a hesitation and it feels like a 50-50 and it can go either way, right now in these conditions, I'm leaning on the side of securing some of those profits. How do you feel about that, coach?
Well, just as you were saying, I was reading from JoJo. Can a stop save me from slippage? Now, stops can have slippage. That's part of the game. And in extreme cases, that happened to me once, your stop might not, and this is, I've traded for decades. It's only happened to me once. But yes, stops save you from losses. Stops might have some slippage in them, and we're going to go deeper. It's a great question. And it's just like you were saying, Coach, it can turn on a dime. So having a stop in there is better than no stop. It's actually essential. And I'm going to put my stop in when I put, if not almost before I put the order in. And we'll go deeper into that. And so, yeah, stop saves you. helps you manage your account balance.
Percent. Forgot to do our intro, but this is at the buzzer, our market recap. The goal of this call is to review what happened in the markets for the day. We may talk about some markets that you have not traded before, but we believe our goal as traders is to identify opportunity, see how we could have taken advantage of those opportunities while managing our risk. If this is our first time meeting, I'm Coach Jay. I've been a top step performance coach since June of 2023. Been trading for the past 13 years in the futures markets for the past 6, and that is Coach Paul. Coach Paul, go ahead and introduce yourself.
Hey, I'm Coach Paul. I've been with Top Step since April of 2023 um, as a performance coach. I've been in the futures industry for 4 decades. Um, so I'm here to share some of my experiences and knowledge and hopefully help educate you and maybe become a better trader.
Awesome. Thank you for that, Coach. We did have some news out this morning. U.S. unemployment rate came in at 4%. Forecast was 4.1%. Non-farm payrolls came in at 143,000 when the forecast was 175,000. Uh, we also had the University of Michigan sentiment number, which really got the markets moving. A bigger reaction to University of Michigan sentiment than we had for non-farm. Also a negative number, lower than expectations, 67.8 when the forecast was 71.8. So the sentiment is a little bit more negative than we expected. We had a bunch of Fed speakers, of course, this president speaking as well. I think there was a mention of tariffs at some point during the day. Um, and yeah, uncertain times, there is volatility. We'll talk to you about how we can approach it. Some of the volume analysis stuff. I'll show you guys an example of what I'm looking at while I'm in a trade from a volume perspective to give me confidence of whether holding onto the trade or not. If you're in the VIP group, we talked about this a little bit, but let's get into the charts. There are 35 different markets that we can trade with Top Step accounts, not just the equities. And right now might be a good time to look at something else if you're having a lot of anxiety in the equities. But to the downside, we had soybean meal down 1.73%. Natural gas down 2.9%, and micro Ethereum futures, our biggest percentage mover to the downside, at 4.61%. To the upside, we had RBOB gasoline futures up 1.47%, heating oil up 1.59%, and copper, our biggest percentage mover to the upside, I think that's the second day in a row, up 2.99%. To talk about our big four, we had crude oil up 0.58%, the S&Ps down 0.88%, gold up 0.4%, and the NASDAQ down 1.3% for our biggest percentage mover to the downside in our big four. I got a 30-minute chart up here, Coach. It's actually Friday, so let's take a look at the daily. What are you seeing on this chart, Coach?
Back to the 20-day moving average. Did we settle underneath it? I don't think so. So we're right at it.
Right at it.
Boy, that just does not do it justice. You look at it, right, the daily, and it really doesn't look that volatile. Interestingly, we filled the gap, um, and went right back into that candle. But let's look at the weekly.
Here's a
Um,
weekly chart here.
there's it almost it almost looks unchanged, although we are starting to go sideways. We're caught in this sideways movement for since the beginning of the year. Right? 1, 2, 3, 4. Yep. Um, Otherwise, we're still in a bull market, and you wouldn't think that it was that volatile if you when you look at a longer term chart like that. Um, so there's really
Still moving to the
nothing
upside.
much on. Yeah, it's still moving to the upside.
Awesome. So let's go down to a shorter time frame chart. We'll look at today's price action. We'll go to yesterday's open. Um, And if we look at yesterday's open, we had another late spike. similar to what we talked about from Wednesday going into Thursday's price action. We had a similar one today. So here's that spike. We are above the 200 moving average. Well, we were above the 200 moving average for most of the day. We came back and checked it, settling below it. But last night's price action, decent trade opportunity here to the long side. Uh, wasn't the most urgent uh, move that we've seen in the equities, and of course, kind of makes sense, right? With NFP coming out and the University of Michigan sentiment number coming out, how much of a directional move are we going to get in the equities prior to that big number? So, maybe you could catch a trade here, and if you want to sit out some of the uncertainty, maybe you catch some of this move, in the Asian session, and then say, you know what, I'm not going to trade New York because there's a ton of volatility there, right? So there is an opportunity there. Not the biggest move, but I think that's okay. But we have the NFP candle here, right? I'm looking at the start of the day as this NFP candle. And we kind of talked about this yesterday, how to approach this. At this time, I was actually trying to long gold a little bit earlier, so I was already locked out of my XFA. But similar trade that we talked about, right? Allowing the NFP candle to print, seeing where VWAP is, and then there's an opportunity to trade back to around 50% of this. Um, where again, this could be your one trade after letting the dust settle here and capturing a little bit of a scalp here. And I mean, it's a pretty big scalp. We're talking 50 points back to the 50% of this candle. And that could be your one trade of the day. Um, New York session open here. And I got long here. And this is where I want to talk a little bit about having an expectation, but then assessing how good of a job the market is doing at fulfilling that expectation. We talk a lot about volume here, and I've talked about volume patterns confirming a move, or the lack of volume confirming that the move is potentially not going to happen. Was talking to some VIPs. They asked, how can I show how I trade, right? So you guys know I look at a 3-minute opening range. And I've been kind of experimenting with a 3 and a 1-minute opening range, but same idea here. What I'm looking for once we establish this, so here's the 1-minute opening range. We left that pretty early. The first spot I'm looking, if I take this long and I didn't take it here, is what happens at the high of this news candle, right? We know the market had a pretty big reaction here. What happens up here? Once we start to settle above and we see this VWAP trailing, I'm buying here, right? And if you ask the VIPs, they could show you. I was buying right at the highs of this candle, and there's a 40-point trade here. Now, in this trade, we're trading at 21,960. I'm going to zoom out. That was the high of this swing right here. So above this, my target is 22,000. I want the market to trade to 22,000. But I have to assess how good of a job is the market doing at getting to 22,000. Coach, you've called out this pattern before, but this VWAP starts to flatten out, right? Initially, it looked pretty aggressive to the upside, but then we start to turn. And if we look at the volume pattern, and someone had asked earlier in the week, and we answered this question a couple of times, can you use volume to tell whether or not a move is going to continue? What do we have here? There's a divergence. Even though we have volume above the moving average, price is trying to move higher, volume is moving lower. So what this is telling me is above this price here, there are no convinced buyers. This is where trade management comes in, right? Where and you can say, "Oh man, I got taken out by a tweet or whatever it was." There are signs in the market prior to some of this news dropping that we can pay attention to that might key us in. Now, am I going to stay away from every one of my tweets every one of my trades being affected by a tweet? It's impossible, right? But when I see this volume pattern decreasing, my stop was down here in this opening range. It has to move up. As long as the market is moving in my favor, I may be okay with my original stop. But if it looks like the flow is stopping, right? And we talk about flow, coach, flow of volume, flow of price. When the flow stops, what happens?
The flow hit the pipe and at a corner.
And it has to turn. It has to go another
Right.
way.
It's, it's very. I go through this. This is important because I actually bought this. By the way, because of the volatility and the extreme we talked about, I'm trading micros. Now I will add to do multiple micros. So I bought one on the breakout on the 3 minute and then on the 5 minute. And at that time frame, it looked like it was ready to roll. It broke the high, it right there. Now, interestingly, it never left. VWAP never left the range, and I so I can't use that word. I got in prematurely. Um, but I still had every time with micros, I put in a stop at if it broke the lows of that the candle, the opening candle. Now maybe you can people might be sick of hearing it. What are the principles of consistent winners? Accept the risk or let it go. I accepted the risk of buying that. I fully expected it to go higher. Now, I could have waited. I could have waited and said, well, and I have a tendency to do that, but I was a floor broker for many years. And when I can't even hear that, I immediately do it because you're stuck. When you get the feeling, if you've ever been stuck in a trade, you need to bring that forefront of your mind when you're entering. So take the ease. Now you're a manager of risk. And this is, I mean, it happened 1, 2, 3. Um, but I love what you have there. You have that declining volume. And this is right out of the old 100-year-old books. Think about it. Volume, time is moving on, less volumes coming in. We're near the highs. It's like coach says, they're not convinced. Um, I I compare it to lifting a new weight on the bench. This is your first time going over 250, and you're getting up 3/4 of the way, and your arms start shaking. Um, there's a point there where it's your arms are going to collapse, or you're going to follow through. Here, more times than not, when you have declining volume, it's going to collapse.
Yep. And the thing is here, right, where what did I just do? There we go. Can the market continue up from here? It can, right? It can. But like we said, we see the flow slowing down. This is where it starts to feel a little bit more like a 50-50. Maybe you don't want to take your trade off. And I'm not suggesting anyone take your trade off, and I didn't either, right? But what I am going to do is say, hey, if I think this can continue to go higher, that's great. But what is the market telling me that it's going to do? And if it's going to present some profits to me here and not go higher, then personally, for my trade management style, I'm going to take something off the table, right? It's not it stopped up here. I'm going to just exit the position completely because, on a higher time frame, we might just continue higher. And this is just a break, right? We've seen this before where this is a bull flag and it continues. Uh, but patterns are patterns until they break, right? I guess this could technically be a bull flag, but they're not always 100% either, right? When that volume steps back in, really nice sell here, and it's up to you, right? When we see some of the comments where people are saying, I lost my account or I lost the trade due to a tweet, my question in that case is, based on where your profit target was, where your entry was, and where the market ultimately got to, what percentage of that move did you take before it went against you, right? So if you were long here from 925 and your target was 22,000, that was a 75-point move you were looking for. At one point, you had more than 50% of that, right? So what are your trade management rules? Do you just leave your stop where it is and let it get hit? It's a different case for every person, but for me personally, in these conditions, it's taking something off the table. Anything else you got on the equities, coach? We can see this pattern a couple of times. Here's the non-farm print. If we attach VWAP to that, just continuing to sell, we can see that VWAP there. And then the president's comments here.
Oh, there was a comment too added to that? I didn't know that.
Yeah. So and all of these have the same DNA volume wise. Decreasing volume, price moving higher, spike lower. Decreasing volume, price moving higher, spike lower, and rinse and repeat.
Hey, coach, yeah, when we talk about the J trade, and now this is when there is no J trade, even though we have those volume spikes, because it never takes the high out of that volume spike. So every one of those were sellers that were in control. Versus if they weren't in control, we'd get over that high and we'd most likely run higher. But that was volume, that was selling volume that the market didn't recover from. Interestingly, with all that volume, we closed towards the lows of the day on a Friday. No, we talk about uncertainty. You want to go home long? I don't know. The way we've been having these spikes, but on the half-hour bar, we closed under the 200 moving average in the S&P and the Nasdaq.
So Dakota mentioned this on Fast Markets this morning. The last 2 weeks have looked exactly the same, right? Where we rally, we sell off on Friday, and then huge gap down. And then after that gap down, we get a 5% down day. We rally throughout the rest of the week. Friday we sell, and then another gap down to start the week. 3 times the charm, maybe. And I don't want to try to predict, but it looks like the same exact pattern. And of course, patterns are patterns until they break. But I would not want to be long going into this weekend. Definitely not.
So, but volatility perked up. We know that.
Yes, it did. Anyone catch any moves to the short side, right? Because there were definitely some really nice short opportunities here. I know some traders called this one out. This 50% of this high volume here, taking this short. This is a 90-point trade here in the Nasdaq. But let's get to some questions. Let's get to some questions, and then we'll go to another market. Okay, real quick for Dante. Dante, the fib retracement tool. 3 on the drawing tools on the left side. 3 icons down, you have Fibonacci, right? What I'm using is the fib retracement, which is right at the top here. But these are not the default settings. The default settings are going to have a lot more of these levels selected. I just have 0, 0.5, and 1 selected. All right, and now I'm using the hotkey to use it, Alt F, click, and then just drag to the other side of the candle. Mr. Krabs caught the reversal from the top. Nice trade. I know Dakota was talking about that one as well. He was trying to get short from 41s. Coach, we got a question here for you. Do you guys use the 50 and 200 day moving average? How much does that affect your decision when they cross on a higher time frame chart?
I used the 200 to give me direction on a daily. In the stocks, it's literally over 90% of the time, or maybe 95% of the time, it's above the 200. Um, but the 50 is the shorter term. And we were playing with that today. If you bring up the daily, um, it's if you, institutions in stocks look at the 50 as a place to either cover from longs and use that as a almost like a pivot point. Um, but we've been playing. Look at how violent this. We've been playing on both sides of the 50 on a solid run up. It should be holding the 50, and this is consistent. So we've been spending time now under the 50. What does that mean? We're losing momentum longer term. What and now we have the 20 and the 50. Yeah, this is actually now such a great question. This is what the market's doing. It's teetering. Think about it. It's turn. Could it be turning? Because it's not going forward after this nonstop run. And you can see that a longer term or shorter term, the structure. Here it's a daily. And what's the first? When did we make the all-time high? Was a month, 2 months ago? Was it in the beginning of
December
December?
16th, it looks like December 16th.
So in a bull like before, look at that run up before the 20s over the 50. Every time it touches the 50, you get a run up. It's support. It's like a trend line. It's still bullish, right? But now it's not holding the 20. It's vacillating. This is going on for 2 months now. Um, that's turbulence at the all-time highs. Has it turned? No. But when we talk about uncertainty, the market doesn't, I mean, the money managers do not like this kind of action. Go back a little bit and watch that 50. It's, the, yeah, it moves away over long periods of time and it's not. So are we making a top? Well, the only way to know that is after it's made. It's really, um, at all-time highs, you should be long. Think about that. Yeah, right? You 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 should be long at all-time highs if you're trading in the trend. Um, but the responsive buying with the 50-day moving average in it, it's flattening out. So think of a rocket. Think of trajectory. It's it's I could say, see the last time we flattened out, it corrected hard, but now it's staying there. So
Yep.
looking at that 50, it gives you an idea of the strength of the trend. It hasn't changed. But I'd imagine there's institutional managers that are buying puts here, and that's being reflected in the vol. So hope I didn't go on too long on that question.
Oh,
But
it's a
yeah,
great answer. The market is losing momentum. How much does that so I guess the one part of that question, how much does that affect your decision when they cross? Um, I think what you're
mm,
paying attention to is the momentum dying, right? But for a day
yeah,
trade, it's where's the market going right now? And especially in this price action, it's gone both ways, right? So if I look at this cross and say, "Oh, it crossed, so I'm only going to short." There are a couple of days where that doesn't work for a day trade, right? For a longer term swing trade, maybe, um, but it's a little different, especially if we're looking at these higher time frame charts.
That's
Uh,
Billy put it best. The 50 is tired. It's been pushing uphill, and it was an easy trade. That's just like I said. It's tired.
right.
It's like
Talk about a market that is not tired, continuing to run. Gold made a new all-time high today. 29, what's the high here? 29.10.6, new all-time high in gold. Uh, on a daily chart here, coach, what are you seeing on this one?
well, the trend is your friend. It looks like it just wants one day. It's just going to explode, and it just has that feeling. Um, how long would we've been over the fit here in this one? That 50's not tired. You can see it, right? And once we got above it in December or beginning of the year, we've set the tone. Yeah. But that's look at the ranges. They're tight. You know, it still seems like there's trapped money in in the cash gold, and it just got that feeling. I mean, look at that last one up. It kind of looks identical, doesn't it? It's almost falling forward.
Yeah, I was looking at it yesterday. We are getting a little bit extended from this 20 moving average on the daily, um, at a whole number level, this 2,900, where these two daily candles, although they closed higher than they opened, look a little indecisive. Does that mean I want to short gold because it's going all the way back to the 20 moving average? Probably not, but I also wouldn't be surprised at somewhat of a pullback, right? Just because, like you said before, coach, with the weightlifting analogy, right? With these ranges, it looks a little heavy, right? A lot of you know large wicks on the tops of these candles. Um, it doesn't feel like it's just a blind buy, but buying it has been the right trade most of the time.
Here's a when it hits all-time highs, it has a violent move in the short term. It's like that's like why I say it has that feel of stuck money. Uh,
Yep.
like all of a sudden, if they all this it either gaps and like a big gap higher or big gap lower. But I know it's showing a big gap to me. A tendency to make a big move to the upside. But it like I said, look, every time we hit the all-time high, we collapsed. What, $20?
Yeah, yeah, we did it. We did it. What was that? Wednesday, right? Made a new all time high. Sold off $25. Did it again today. Made a new all time high. Sold off $30. So, uh, it's not a blind buy, right? It's not a blind buy. We can go to a shorter time frame. We know NFP is going to affect the metals as well. We can look at last night's open. Going to be the similar story, where actually last night was a decent trade. 30-minute opening range. VWAP left the range. Could have been done before before the day started. Uh, Really nice move here. 2 ATR stop would have been 9 points, buying this 30-minute opening range breakout. I got a didn't really get a 2 to 1, but you got close, right? And again, in these conditions, I'm securing profits as they present themselves. Am I always going to catch a 100-point trade in the Nasdaq, 50-point trade in gold? Maybe not, but I don't need to have a good day, right? We talked a little bit before, Coach. It's about a month ago where we talked about a 40-point trade in the Nasdaq could be your entire day,
Yeah, why wouldn't it? Here,
right?
we brought that up, and day trading. You get 2 to 1. You done good.
Yep.
If in your mind you think you're going to buy the low and sell the high, it's not going to happen. Get it out. 2 to 1 on a risk reward is a 50% return on risk. Just be quick, be good. That's that's what day trading is. Um, and how many times we've gone through it this week? There's been 2 to 1 trades, risk rewards on both sides of this market. I want to bring it in principle. That's it. That's a good trade, especially in the short time frame. And maybe you get 2 2-to-1s. Um, that's rare, but take the money.
Money and go. Take your money and
You
get
know,
out of there. And then it might not be what you want to hear, right? It might not be what you want to hear, but I've seen just so many traders say, "Oh, I had a great trade," and then so and so said something. Guess what? We can't stop anyone from talking. So you have a decision to make, right? You could either secure some profits or hope that when a comment is made, it moves the markets in your favor. Uh, but I don't want to try to rely on a hope. So in these conditions, going to take what the market presents. And if you're on the right side and the market continues to go, ride that wave. But uh, I'm securing something. JD just said it in the chat. Day trading has a place in your portfolio. Make your money and get out of the way. I 100% agree.
thank you.
I 100% agree.
Experience.
You hear you hear you hear athletes talk about it all the time, right? Where athletes are looking at well, there's different tiers of athletes, right? You have your LeBrons, Steph Curry's, Kevin Durant's, Lionel Messi, right? Who play their sport for 15 plus years, get multi-million dollar contracts from it. Those are the anomalies, right? The
Yeah,
person who gets in the league and says, "Hey, I might have a 3-year stint here, and then I'm going to go play in a country that you know I've never heard of before, and my salary gets cut." What they try to do, where it's just like, "Hey, this is a short period of time for me to make a decent amount of money. I need to take it and do something else." If the lifespan for my career, and I'm not talking about day trading careers here, but I'm talking about the lifespan of a trade. The lifespan of all of your day trades can't last more than when the market closes, right? So we can have these, far out there goals for our trades, but at the end of the day, you have to close that trade, right? So if it's not presenting it to you today, like JD just said, day trading is a part of your portfolio. This is, hey, I'm going to get some quick money and then put it to the side to do something else. You heard Dakota talk about it when he took his payout the other day. Um, I don't think many of us should be looking at this as, if I have a 100,000, well, just put a number out there, $100,000 credit card bill. I'm not going to make all of that in one day, right? Or if I have student loans to pay off, I'm not going to, and you could, but that to me should not be the expectation. Um, where taking quick money, putting it to the side, and going to try to do that as many times as possible.
that's your job.
That's all this is. It's a
Uh,
job.
you 2 to 1 is really good. I mean, if you were we talk about hunting, if you're fishing and you catch a fish that can feed you, you throw it back. Oh, I
Want a
need a
bigger
bigger
fish?
fish. And then the evening comes and you didn't catch the bigger fish. What's going to happen? I'm going to be hungry and
Goldfish. Eating
eat
goldfish.
goldfish. Yeah. Yeah. Eating goldfish and learning to love them or eating
Right.
dirt.
Right.
It's our job. We don't day trading. Remember, that is a great discussion. I had to make adjustments from swing trading to day trading. Give it some more time. It's not, no, it's a short time frame, just consistent ability to take reasonable profit.
H just said, so does that mean take more trades with less reach over one long trade? I did great with long trades, but maybe the market has changed. So it depends. And I'm definitely not suggesting taking more trades, right? I'm not suggesting that at all. What I'm suggesting is if you have a trade that's profitable, don't let it turn into a loser. That's my approach, right? And that's just a suggestion. But if you have a trade that's profitable, don't let it turn into a loser in these current conditions. If there's a way that you can find to trail it, like that Nasdaq example we had yesterday, right? That was a trade that pretty much once it started giving me favorable price action and got away from my stop, it was all one directional. I can hold this. If I'm in a trade and the market is doing this, this is not one directional. For me, I start to feel like I'm hoping. So if I have a 2 to 1 and the market looks like this, I'm taking something off the table. I don't want to hope that the next move is going to go in my favor if I'm long here, because what happens here? So if the market is moving in your favor in these conditions, the way I'm looking at it, keep moving, right? Keep on going. But if it's not moving, I'm going to try to secure something. Hopefully that makes
Um,
sense.
and you know, it depends on market you're trading. When you say the longer term, we just looked at since December, the market has has changed. Well, we've gone into a choppy stage. How do you know? Well, we're in it. No one, I don't hear a prediction is, well, it's going to be choppy for the next 2 months. I just never, I don't hear that ever. So we don't know. But if your trading style is for longer trades, this is not going to be a good rotation for you. This current market state, and this is where risk management comes in. Um, it's called, in physics, it's turbulence. There's laminar flow and there's turbulence. Laminar flow is for a trend follower is what you want. You just love it. It's just free flowing. You get in the river, you don't just go with the flow until you make the turn or hit the waterfall. So we're in that right now. It's turbulent. Both sides, if you are getting can get hit. Um, so clamping down, or actually start trading a shorter, give it a shorter leash, because to give it a shorter leash, you're protecting what?
Downside.
Downside. So most likely you're in a drawdown if you're been making money on a, I'll call laminar flow. It's it's easy, buy the dip. It's called buy the dip because it works. Till the buy the dip, and then the next dip, and then the next dip, and it's stopping. What I'm saying is, yeah, maybe it's time to change your strategy for a little bit, for a little while, until you can, recognize we're out of it. Um, that's how you protect capital. And, as all great fund managers talk about that, can you make it through the turn? So maybe same thing. We started using the word turn. Don't know yet.
I want to remind everybody, we don't go through them all the time, but there are other markets to trade as well. If you're struggling with the equities, the agricultural markets have been providing some really nice opportunities. Here's corn, 3 minute opening range break on corn, and just a really nice trend to the downside. We'll keep mentioning these because there's opportunities in other places. It's going to be it may be out of your comfort zone a little bit if it's something that you have not traded before, but if you consistently, and we talked about it before, right? We're trying to make sense of uncertainty, and it's like, oh man, a tweet came out. That uncertainty. I mean, it did affect soybeans here as well when that comment came out, but there's a lot less potential for that uncertainty here. Um, and it's not the markets are not going to stay like this, right? I actually really embrace the volatility, but if you're struggling with it, scale down, be comfortable trading one micro in the equities or in the metals, or look somewhere else for now until that changes. We got a lot of questions in the chat, Coach. Any other market you want to talk about before we get to the questions, and then we'll go with that.
Um, let's get to the questions. What time is it? Yeah, we're
We
at
got 15 minutes.
15 minutes. Let's go.
All right.
Questions.
Is it unusual for gold and the dollar to go up together? Throw that to you, Mr. Economist.
How dare you insult me like that? um,
You got more experience than I do as an
it,
economist. I'll say that
I
much.
know. This just I'm a reformed economist.
There you go.
By the but just s- getting back to the question, it's to quote Tom Jones, it's not unusual. They can work together, but it's doesn't happen often. Trying to say that that's why when I say as an economist, you would think that, and I agree. I tell you, in school, the dean of the econ department ran, and this was in the early '80s, a futures trading class. I think there was two of them in the country, and why I'll bring this up. He was an economist and a great guy, and he taught me a lot. I learned, and I'm not here to insult economists. I am, but trading thought and economic thought are two different mindsets. One deals with this should happen, and a trader is this is happening. So, well, I had to make a choice whether to stay full time at school or work full time and go to school at night. So I talked to my professor, and he knew futures. We had a futures trading class. We were very close. And I said, "Listen, I have to make a choice." And he goes, "Well, what do you want to do, Paul?" And I was working on the floor. I said, "Well, I'd love to learn how to trade." He goes, "Paul, I teach because I can teach. I don't trade. I don't know how to trade. I'm a terrible trader. You want to learn? Go to the exchange and learn from good traders." And it was his great advice for me. And why I bring that up, that shouldn't happen. Economically speaking, it shouldn't happen, but it is happening. So when you hear me, I look at every market in its own merit technically. I suffered from going, this should go this way to a point of the market's wrong. They'll find out and I'll be a hero. Well, I just don't have that much capital to hold, you get forced out. So that can happen. Trade them independently. That's when I became a technical trader. So it could continue or it could change. Um, Trade them as if they're two different entities.
Good point there, coach. Yeah, we've got another question, kind of similar with gold at all-time highs. Is that sort of an indicator for lower equities or bad economy in general? Again, that's more of a what. So when I think about these things, so these things are not front of mind when I'm day trading, right? Exactly what Coach Paul just said. My trading mentor used to say all the time. Uh, he graduated from college with a C average. He went to a community college, but there's somebody. If the way I look at my trading, if my job is to find the flow of the market and get in the flow of the market, there's somebody who's getting paid whatever their salary is to try to figure out whether there's a correlation there and then express that opinion in the markets. My job is to follow them and be a good follower, right? So I could hear a comment from the president or on tariffs or whatever it is, and I could have an opinion about it. Nobody's paying me for my opinions about what the president says because they're probably not very good, um, especially when it comes to the markets. But I can read the market and see that response, and that's my job as a trader, right? Follow the flow, identify the flow of the market, and get in. Whatever causes the flow, to me, by the time I know what caused the flow, I'm already a little bit too late. Especially for making day trading decisions. Long-term investments and things like that, different story. But for day trading decisions, by the time I know why, it's too late. Uh, all right. How much would you risk per trade with $2,000 drawdown.
Well, the just the it depends on how much of a balance you have left. $2,000 drawdown from 10,000, $2,000 on 3,000. Um, because you're trading your equity balance. I mean, but it's the amount in your account that. So if it was 2,000 and you had a $10,000 account, so 20% drawdown, I would cut my size in half or my risk. And I mean, this is a really good question. And this goes back to what we've been preaching. You're trading the balance in your account. You're not trading the market. You're putting out risk in looking for return. How much if you have a $2,000 balance now, 10% is 200. 400 would be 20 20%. You got to pare it down into 15. You got to pare. You have to slow down in the drawdown to protect the capital. So without knowing how much is in the in balance, start measuring it with whatever the balance is in your account. If you have $2,000 balance in your account, 10% is 200 on one trade. Well, what's the average true range in a minute in just in the Nasdaq? Micro. Let's do the micro because you can't. We're not even going to bring up.
On a 3 minute, okay, let's go to a minute. ATR is during the highest volume time because that's when most people are trading. 30
Yep.
points.
So on a
30
micro,
points.
that's $60 for one trade.
Yep. With one
And
micro.
that's with one micro, with one fluctuation. That's one ATR. Two ATRs. This is on the 1 minute.
This 1 minute candle is 164 points. With a one
And
lot micro, that's 200 and it's 300 actually. It's like $350,
yeah.
something like that. Yeah. This is why we're saying trade micros. And even with one, right? Even with one, it might sound small, but I don't know if you guys are realizing how tight that drawdown is with trading the minis. You could do a lot with just one micro.
Yeah, because it your size risk size is in relation to your equity. I just think about what's the challenge or why we're doing it. Why is Top Step you're in a combine? They want to see how you manage. And there's rules. If you can do this under these circumstances, we'll give you more money. If you can't, so learning so why I bring that up is learn how to manage the account. Now there's different ways you can be more aggressive, but you have to have a higher percentage of winning in your plan. If you have a lower percent, you have to put on smaller risk size. But major at 2,000, if you have 2,000, if you have 1,000 left, do do the math. 10% is 100. Maybe the equities is in the place to be if you want to build it. Maybe corn is. Maybe micro Bitcoin, because you have to learn how to manage risk. And if there's too much volatility, in the shortest term available, uh, you, you're not going to be able to handle. You're just relying on luck, also known as gambling. So check your account balance, a 2,000 drawdown from where, but look at the percentages and defend your capital.
We got a lot of questions today. Quick ones. Explain the psychology behind taking only a few trades a day. Conserving your mental capital. Um, Talked to my VIPs about this earlier today. Uh, when you make a couple of decisions and get off the screen, you alleviate the pressure of having to make good decisions every single time. And then you can conserve some of that mental capital for the next day. Even if you're switching to a practice account, I'm going to be honest with you, I really don't like that. If you hit either a daily profit target or a daily loss limit for the day, at some point, I think it's better to just walk away than to switch to a practice account and continue trading. Because when we're looking at the markets, we're still looking at it with the intentions of, okay, when I get back to my other account, how can I make another good decision? At some point, we need to build into our days. And coach, I was talking to the VIPs about this because a lot of people we hear, saying they want to trade for the freedom, but then never actually build in what that freedom looks like during their day. uh, if you're able to make money early, and it's a scary thing because it's just like, okay, well, if I made a trade in the first 15 minutes of the market and I made $1,000, what the hell am I supposed to do with the rest of my day? You asked for the
Go.
freedom. Figure it out. I don't know what to tell you. Whatever you like to do, whatever hobby you have, it's not the charts. This is a job. This is a job. So do the job, get away, and then figure out whatever freedom you've been dreaming about the entire time. Go do that thing, right? Because otherwise, we look at the charts, and every time you look at the chart, it's going to look like an opportunity for you to make a decision, and that decision is always going to be, "Oh, I wanna make money." The decision we make is never gonna be, "Oh, yeah, I wanna sit here and lose money." Who the hell wants to do that, right? So if you make your
Unless you're
money
laundering it.
right. If you make your money, go experience the freedom that you wanted off the charts somewhere else. Um, so there's the psychology with that. You could sit here and try to make 1,000 trades all the time. You might see us, you might see me on Topstep TV multiple times throughout the day. In between those times, I'm doing something else. I'm off the charts, but also this is my job. Part of my job to be on Topstep TV, right? I see some people in the chat where they're in the YouTube chat. They're in 6 different Discord channels. Unless I'm unaware, most of you aren't getting paid to do that. You're getting paid to execute trading decisions. So if being in the chat and being on YouTube and watching Top Step TV is distracting you, and please watch Top Step TV. I actually suggest watch Top Step TV if you want to know what the markets are doing, but you don't want to have to be susceptible to making a decision. Turn on Top Step TV and just listen to it in the background, right? We appreciate the view, but that doesn't mean that you have to be at your desk making a decision. Um,
Great point, coach. We have a question here, and we haven't done this well.
okay.
Do you guys trade the treasury notes? Bonds just don't get enough attention. I'll give a golf clap to that. We preach for what months. A good place to trade is 10 years. Okay, it's not a Ferrari speed like like the Nasdaq, but then you have to be good to trade a Grand Prix tour. I mean, it takes a lot of experience. Not that you have to be a bad, but you could be driving a solid Mustang down the highway. Um, if you're trading notes, it doesn't have the whipsaw all the time. Now, don't get me wrong, there'll be times where it makes a violent move, but over a longer period of time, yes, there's great opportunity, and maybe I'll write that down and we'll cover that a little more because we just saw sometimes if this volatility is too big, like someone who has $2,000 left, right? That we're just talking, maybe it's the 5 year. 5-year, I think it's $600-700 average to range for the day. Okay.
Yeah, let's see.
So
I don't know
thank you,
exactly what the
Jojo.
price is, but yeah, these are great markets to trade as well. Charles Williams says those spikes are too much, but look at what the spike would be the same spike in the Nasdaq, right? That spike that you saw was non-farm payrolls. Just don't trade this. Trade everything else outside of it. Uh, all right, coach. We are at time. I think I
Wow.
got one more question here that I want to get to. Paul H is going to be joining us next week. Paul, we can talk about this maybe a little bit more next week when you're on. But Paul asked a question. For the past 5 days, my XFA is bleeding away from 5K down to 900. Every trade I take that works is in a combine for 5 days. I'm up 803 combines today, down 400 in XFA. How do I turn this around? I have my opinions, coach, but I'm going to let you go first.
Um, how do you? We just talked about it. You can't turn it around on will. You have to slow down, size down severely. Go back to the principle of how much percentage of risk you have available. And this is a real key here. It's available, not what you had, not necessarily what you want, but this is what's available. And that's what I mean by paring down. Um, if you might need to go to one micro because you've had success, you've made money. Next thing to look at is we just said, look at the market when you were you had consistent profits. We said so this January and February is a different market. So I mean, we just talked about it, the same thing. Pare down. Focus on how much you have in your account. Don't lose more than 15% in one day. And then one day you just as easily you can get a consistent roll again. Anything you want to add to that, coach?
Yeah, so you are seeing some success in combines, but not in your XFA. And Okla Torch just said it. You can only drive one car at a time. If you got a 20-car garage and you're trying to drive all of them at the same time, it's impossible, right? You're only one person. You can only be in one place. Um, NP has said it himself, right? Where we saw the switch to, for live account traders, only being able to trade the live account with Topstep or combines if they want, but focusing on the live account because that's where they can make money from, right? With the multiple account thing that happened, I think that there's a false sense of accomplishment that happens with traders where if I don't see success over here in my XFA, which is the account that matters, that's fine. I'll make myself feel better by going to a combine and trading and seeing some of the success there. Focus on the one that's going to make you the money and put everything else to the side for right now, right? Because you don't get to choose which of your trades are going to be winners and which are going to be losers, right? And we also know that trading in that XFA, there's that added pressure of, oh man, this is real money. Um, we can't run away from that. If we want to get paid from this, that's going to continue to happen until you say, hey, you know what? I have to solely focus on the XFA. How many times has that happened to most people in this chat, right? I can get through a combine, um, get it to the XFA. The XFA struggles, but I could pass another combine again. You're not accepting the fact that you have to put on risk in that XFA. And this is not just you, this happens with a lot of people. You're not accepting the fact that I have to be comfortable with putting on the risk there and going from there. So you can take good trades, Paul, and we've seen it before, but I don't want you to distract yourself from what's required in your XFA with trading in combines. If the XFAs aren't going well and you hit a daily loss limit that I know you measured for the day, instead of switching over to a combine, leave the charts for the day. That would be my suggestion. Uh,
Great answer, coach.
Great question. Great
Well,
question. Uh,
we could go on for a while, but it
Last
is
question, Chiefs or
Friday.
Eagles?
I'm going to answer that with whoever scores the most points.
Fly, Eagles fly for
Uh,
me over here.
um, is it because they're neighbors of New York, or
Oh, yeah,
it's,
yeah.
and
Got
it's
you.
in the hood?
Yeah, Philly's close. Philly's close. Just love the
Yeah,
team. Think Jalen Hurts is a great quarterback. So
I do
be
too.
nice to see them win it.
Um, I don't want to see a three-peat. Sorry, Kansas City Chief fans. Oh, but I'll tell you what, earn it. You know what I mean? Earn it. So if they do, they get the accolades, but um, I'm leaning towards Philadelphia.
There we go. Same here. We will see who
Um,
wins.
and I
I'll
love
be watching
watching
the game
Jalen
Sunday.
Hurts. Who's the running back too?
Saquon Barkley. Yeah, he's a monster. He's a monster.
He's a modern day Walter Payton. And from a Bears fan, that's just about as big a compliment as I can give. That guy is unbelievable. He does things I've never seen in watching football for 50 years. It's incredible to watch. So may the best team win.
Let's do it. All right. Enjoy your weekends, everybody. Spend some time off the charts. Experience that freedom that we're all looking for as traders. Even if you're not where you want to be as far as success goes, practice that way, right? Dress for the job that you want. Figure out, okay, this is what I'm going to do when I get that success, and then it'll come to you a little bit quicker. Thank you, everyone, for joining. I got nothing else. Coach, you have a great weekend. We'll talk to you all
You
soon.
too, coach. Bye.